StarkNet basically takes robust, post-quantum secure scaling ZK technology and uses it in order to scale blockchains. Bitcoin was built so that any two parties can interact, can transact with no third party intermediating that. That is not achieved today, and that is what Satoshi set out to do.
Yeah.
And we need to reach that. Jack Dorsey is saying it. A lot of people out there are saying it. You need to find a way to scale it. And unfortunately, I love Lightning. Lightning ain't it. After 5-7 years out there, my mom is not going to use Lightning.
Yeah.
My mom can use, in fact, she does use StarkNet wallets. She's not going to be able to use Lightning. It's not going to happen. Sorry.
Did you forget about OPCAT? We didn't. We've got Starkware co-founder Eli Ben-Sasson back on the show this time. My co-host, Will Foxley, is hosting this one, recorded live at PubKey. Eli talks OPCAT, ZK, Bitcoin history, Bitcoin development, and Starkware's StarkNet on Bitcoin. Enjoy the show.
Hey, welcome back to Bitcoin Season 2. It's a little takeover episode. I'm joining. Normally, I'm hosting the mining pod, but Charlie's not in New York, and we have an amazing guest today. Eli, welcome to Bitcoin Season 2. This is your second appearance on the show, first in person.
Thank you, Will. Always a pleasure to be here.
Yeah, we're super excited for today's conversation, which is all about a new announcement you guys have, and it's all about making Bitcoin actually usable, and not just Bitcoin on TradFi rails, but Bitcoin on cryptographic rails. So I'm going to let you do the announcement, and then we're going to dissect it the rest of the podcast.
Right. So we've just announced, or we're announcing BTC-Fi, which is has three major components. The first one is that Bitcoin staking is live now on StarkNet. The second one is that the StarkNet Foundation is allocating 100 million STRK tokens to make borrowing against your Bitcoin cheap and competitive. And the third one is a whole bunch of contributors are joining this effort. I want to mention one of them. The Re7 crypto fund is launching a suite of BTC yield strategies, some of which are going to be deployed over StarkNet. And we're very happy for their contribution and joining the effort.
Which one are you most excited about? I feel like as a technical founder, it's got to be the first.
Well, actually, I have a lot of kids, and it's like asking which one you love most. So, that's I'm very excited about each one of them, and they complement and go together. So they're needed, each one of them.
Well, we'll start with the technical portion because that was the first in your list, and then we're going to go through the other two parts, which are a little bit more commercial, but still very important for how this is going to unfold. For the first part, explain to me what native staking Bitcoin on Starkware looks like, and if you can start from the relationship with the L2 and then how that kind of fits into all this. And then I'm assuming this is separate from that because you guys operate on both ETH and Bitcoin. And so I'll let you kind of like rattle on through all of that. But the point being, some of the audience members aren't going to know all these points. So if we could start from more like first principles on that.
Yeah. So for those who don't know, StarkNet is a scaling solution that is decentralized and self-custodial, and it relies on the integrity of math. So I'm assuming many of the listeners don't know, but in my previous life form, I was a mathematician, cryptographer, professor of theoretical computer science. I invented a lot of the ZK technology that is now used around there. So Zcash, which I co-founded, is based on academic work that we wrote, 7 co-authors back in 2014. And ZK Starks, which are the post-quantum secure, best used, most scalable ZK proof family out there that has now become the gold standard for scaling, is based on my co-inventions, the ZK Stark paper and the Fry protocol and other things. Okay, so going back to StarkNet. StarkNet basically takes all of that robust post-quantum secure scaling ZK technology and uses it in order to scale blockchains. So it was easiest because of the smart contract language available to do this on Ethereum. And that's where we started with a bunch of solutions. And we've, serviced some of the most formidable and best perps exchanges and other solutions out there in history, and we still continue doing that. But now we see an opportunity, and certainly there's a huge demand coming from the financialization demand for Bitcoin. And we want to deploy the very same technology to scale Bitcoin in a self-custodial, decentralized way. So that's a long answer to a short question.
I think for people who are maybe like glossing over a little bit when you start hearing about the math parts, and this is foundational in Bitcoin, right? So zero knowledge proofs were commented on early Bitcoin talk forums. Satoshi talked about using them, just like he didn't have the background, and he said that on the forums that he was not going to be able to do it. And then yourself spoke at Bitcoin 2013 or
Yes.
Bitcoin 2014,
Yep.
talking about needing Bitcoin to implement this in the future. And then I'll let you tell a story, but like a lot of this took years to come back to Bitcoin because Vitalik came up with Ethereum, and it was obviously a little bit easier to build over there, and a lot of the money moved that way. So can you tell me a little bit about the history of zero knowledge proofs in Bitcoin and where we're at in 2025?
I was a professor of math. I was peddling my practical implementation of ZK mostly in academic places like whatever, Harvard, Princeton, Stanford. And it was in 2013 that I knew I'm going to give a talk both at Stanford and Berkeley. And I reached out to Gavin Andreessen and Greg Maxwell and Mike Hearn, a bunch of other core devs at the time, and said, there's this math I want to present there. And they said, sure, come present it. I entered that conference. I just fell in love. I got red-pilled there. Have been with Bitcoin and blockchain ever since. So I was the first to go and say that ZK is the way to solve not just the privacy problems of blockchain, but more importantly, scalability. And back then I said, I have a vision that one day when you download, and you want to sync a new node, you won't need to go through all of the transaction history. You can download a single short proof and know that everything happened with integrity. And we're almost there. We already have a proof of all of the block headers done by our team member, the amazing Abdel, and Michael on his team. And we're nearing, with every day, we're getting closer to proving the whole Bitcoin blockchain.
And honestly, we could spend an entire podcast talking about why that's important, but we won't. Well, we can go with the announcement.
Yeah, we have to get back to BTC Fi. Yeah.
IBD and all that stuff is really important. And I think what Robin Linus has done with Zero Sync, and then what you guys are doing, definitely saw your announcement when you guys were talking about using zero knowledge proofs to just do a lot of stuff with the headers there. Going back to zero knowledge proofs and the scalability comment, that's really important, right? Because a lot of times when we have conversations around zero knowledge proofs in crypto or Bitcoin, people are thinking immediately it's about privacy, or it's about hiding stuff from the feds. And there's some elements for that. And most people in Bitcoin are privacy focused. I myself am. I'm sure you are as well, as a co-founder of Zcash. But the scalability part is really important. That's what changes people's thoughts around this. And it's even in the conversation today. I don't know if you saw the Luke Dasher post last night on Twitter about how they're interested in using zero knowledge proofs for Bitcoin right now. Which
yep. I'm a big supporter of using zero knowledge proofs and having soft forks that would support that. And I know that a lot of core devs from Luke Dash Jr. through, Adam Beck, Andrew Polstra, Ethan Hellman, and a whole bunch of others are supportive of that.
Yeah. No, there's definitely a lot of interest around it. Tell me about the scalability part. So let's land the plane on that. And then I want to go over to the staking part. But on a practical implementation level, and then for an audience that's a little more agnostic to these topics, how would ZKPs allow you to have more scalable Bitcoin? What would that look like?
Yeah. So the way ZKPs work, it's a little bit like polling an election, right? You want to get some good accuracy estimate for who's going to win the election. So instead of going and asking every single citizen, which is what happens on election day, what the polling systems do before that is they sample randomly a bunch of people, and based on that and the laws of statistics, you can get a pretty good estimate for who, how it will shape out. Now, the amazing mathematical discovery is that you can poll the integrity and validity and correctness of a huge amount of computation without needing to check and inspect each and every transaction. So today, a Bitcoin node has to basically inspect every part of every single transaction in order for everyone to know, and for that node to know, that the right thing was being done. But the amazing mathematical discovery, and that's the discovery or the set of discoveries behind ZK Starks, is that you can, and the things that predated that it's like 4 decades of research. But the amazing part of ZK Starks is that you can poll the integrity of a huge amount of transactions. And for the cost of verifying one single transaction, you can have cryptographic certainty that 1 million transactions happen correctly. So for the price of one, you can check 1 million transactions. Now, what does this mean for Bitcoin? I remember several times in the past where adoption of Bitcoin seemed to be taking a step function, and it immediately stopped. Now, why was that? Because you know what happens? Everyone wants to use Bitcoin, which is great. What's going to happen to fees? They're going to rise to $10, $50. Then everyone from the outside looking at this, they're saying, okay, this isn't ready yet. And they go back. So you see these peaks. Same thing happened on Ethereum and so on. Now, what scaling would do, it would mean something like ZK Starks. It would mean that the whole world wants to come and use this. And you know what? They can. There's no increase in price. There's no increase in delay or latency. Everything just works smoothly without actually that much of a change to Bitcoin itself. What you would want is just something like OPCAT, or could possibly also be a BitVM bridge, which doesn't need any change and is coming anyways. So that is the vision. The vision is that a whole bunch of economic activity is going to happen on Bitcoin, on decentralized platforms, in the way that Satoshi would have approved of.
Okay. So that helps us kind of like see like the general point for StarkNet and Starkware. In terms of help me bridge here between Bitcoin staking and then what you guys are doing with scaling Bitcoin. Like, how do those two things fit together?
Okay, excellent question. So I want to introduce StarkNet and the STRK token, which is used for the staking. So Bitcoin, never going to have more than 21 million Bitcoin. That's great. And they're mined using proof of work, which is great. Okay. You don't want to touch that. Now you want a decentralized layer that will allow, in a decentralized way, self-custodial way, you want something that will allow you to financialize Bitcoins, which means borrow, stables, other tokens, whatever, stock, whatever you believe in against it. Consume, do your daily consumption, buy your cups of coffee, which are usually done. I mean, we're here in PubKey, but outside of PubKey, you pay with dollars or something like that. So you want all of that to happen on something that is very closely tied to Bitcoin. It is decentralized, censorship resistant. Now, you're not going to use Bitcoin and Bitcoin mining for that. You want another layer. And that is what is known as a layer 2 for Bitcoin, a financialization layer, an execution layer. StarkNet is that layer, and it is controlled by a proof of stake kind of mechanism where stakers of the STRK token, operate it. They validate blocks, they propose blocks, they will propose blocks, they will generate proofs for this. And the token is used for paying fees for governance on the StarkNet token and for operating and choosing the next operators. So what we've done now with Bitcoin staking is said, we would like not just the decentralized, ecosystem of STRK holders to be part of the operating set. We want Bitcoin holders to be part of that set and then to be remunerated, to be, given STRK for their services. And that is the Bitcoin staking on top of StarkNet.
And part of this is like using that proof of stake mindset, which I think like a lot of Bitcoiners, when they first hear about, we're going to use a proof of stake network attached to Bitcoin, they kind of like cringe at it a little bit. But it's really important, right? Proof of stake is an actual useful innovation that does power the ability to do some of these networks, and also allows you to have this sort of mechanism where you do earn an interest or a yield back on like whatever work you're doing. It's just different than the proof of work. So maybe you could like speak to that a little bit for some people who are like perhaps get a little confused with Bitcoin's proof of work and then this network is not.
Yeah. So both proof of work and proof of stake. And to the extent there are other things, proof of storage, proof of useful work, there's a whole bunch of things. So they are means to an end. And the end is your freedom and you not being censored, and you truly knowing that no nation state, no corporation, nor can stop you or seize your funds or control what you want to do. Okay, so yes, you get that on Bitcoin in a spectacular way using proof of work, which is great. On a Bitcoin layer 2, I could see that some of them would want to use a proof of work. That's fine. I think that's definitely doable. You could also use a proof of stake. And on StarkNet, what we have is a proof of stake, which has a lot of benefits, especially for this particular purpose. Yeah. And I want to remind you that the whole point of a layer 2, a financialization layer for Bitcoin, means that you're not really relying on the consensus of the layer 2 to secure your Bitcoin. You're relying on mathematical proofs of integrity for that. And you go back to the mother chain, Bitcoin or Ethereum, in order to make sure that the right thing was being done.
Okay. So we got all those little points together, which is great. Now we kind of have the scaffolding to talk about what this means for someone who has Bitcoin. So if I'm, Joe Nakamoto with 21 Bitcoin, and I go to your chain and like deposit my Bitcoin, what are some of the practical benefits that you guys now have after this announcement?
So by staking your Bitcoin onto StarkNet, which you can do today, and you can do today. Yeah. And I think like in a week or two, I don't know when this is airing, there will be a retail facing portal that will allow either 1 or 2 click from Bitcoin and 1 click deposits from, Solana, Ethereum, Arbitrum Base, a whole bunch of very popular chains. Yeah. So what you can do and what you will get is it will still be self-custodially, your Bitcoin. Okay. It will be entering the staking protocol. You will receive STRK tokens as staking reward over time. Yeah. And with time, you will sort of either operate a validator or delegate it to one of a very large set of validators, including by teams like Anchorage and others. And then your Bitcoin will support the decentralized proposal, proving, and validation of blocks of this financialization layer for Bitcoin.
Okay, and so from a individual standpoint, few clicks, which is always great, just to have like that simple interface. On the back end, tell me about the security that goes in there. You said it's like still self-custody, which I'm curious about, if there's any slashing conditions or if there's anything else that's involved with these networks, which sometimes there are. And then I'm also curious about like if you are doing like delegated proof of stake, like to some of these larger ecosystems, which can make sense. What's their relationship to the Bitcoin if there is like a slashing event or something like that?
Right now, there's no slashing on the staking. That will come later on. But we're still a while away from that. Okay. For now, the main thing you should know is that there is a redeem period of 21 days. I think we're considering, or the ecosystem is considering shortening it a little bit, but still it will be there.
For the meme, right? 21. You gotta do it.
I didn't think of that. Yeah. I thought of it as 3 weeks, but so there is a unstaking period in order to make the change in the amount of stake more amenable to the algorithms that operate the proof of stake. Right now, there's no slashing. And in terms of risks, do your own research and always study. I will say this. So there's always, let's say, the smart contract risk. Yeah. It is a very simple, battle-tested smart contract. For instance, it has been supporting the staking of STRK for, I think, over a year. I don't know the exact amount of time. And by now, there's over 500 million STRKs staked with it. So it is pretty battle tested. Yeah. And beyond that, the usual blockchain risks that go everywhere. We do pride ourselves with being a very, very technically powerful and production ready team that has serviced, over many years, many leading protocols. So I think, that will, there's pretty good security background. Everything's, of course, audited and so on and so forth.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin. So for the staking rewards, you're giving 100 million, which my math is like around 11 to 12 million.
The staking rewards are different. The staking rewards are ongoing. Yeah. There's no cap amount to them.
Okay, great. That's a great point to make.
There is a minting curve for it, which basically the larger the amount of stake, then the larger overall the number of STRKs that goes per Bitcoin. But yeah, so there is a formula that controls that. The 100 million STRK are going towards something different, which is not directly related to staking. Okay. This is for the financialization, for making StarkNet the best decentralized place for folks with Bitcoin to financialize it, to put it as collateral, borrow against it at the best rates possible.
Okay. And so for the, I'll just say like the yield from the depositing your Bitcoin side of things, is that coming from new StarkNet tokens that are issued for this?
Yes,
or is
this
it
is
from
minting. It's like the minting. It's like the mining rewards, right? Yeah. So in a proof of stake, you have minting rewards for those who stake and operate the network.
Okay, so it's new, separate from the old contract, because you guys have the two chains, right? So it's like on ETH and then on Bitcoin, and then so how do those?
Oh, no. There's one chain which is StarkNet. Okay. StarkNet is connected both to Ethereum and to Bitcoin.
Okay. And then you have
it's one global minting function, but part of the minting goes towards BTC being staked. Part of it goes to STRK being staked.
Great. Okay. Glad we cleared that part up. So let's go to the 100 million, which tell me about the incentives for that and like what are you guys trying to incentivize people to build on top of this and do on top of this?
Yeah. So first of all, we want to incentivize folks with Bitcoin who want to borrow against their Bitcoin for a variety of purposes. Maybe they want to leverage and, go long on Bitcoin. Maybe they want to consume in a way that is more tax friendly. I want to mention, I am not a tax expert. This is not tax advice and it varies by jurisdiction. Do your own research. But that could be another potential use case. Another one is that some people, I know that I'm here in PubKey and you're not supposed to say this, but I've heard that there are a few who might want to go long on some other tokens out there. Just saying this, don't kill me for it. But for those who want that, right, you want to put your Bitcoin as collateral in the safest possible way, and then, ape into whatever it is that you want to ape in. So right now, most of that is happening on centralized platforms and corporate chains. And we think there's demand. We know there's demand for something that is more decentralized, more tightly connected to Bitcoin. And we want that to be StarkNet. For that to happen, we want initially to incentivize and have like a very, big market, deep liquidity. So
is there something particular that you were drawn to at the lending market? From a background perspective, DeFi Summer was, really kicked off by the lending protocols like Compound, Aave, Maker, enabling people to, whales mostly at the time, to actually use their Bitcoin or Ether or whatnot for productive means. And so I've always had like a big sweet spot for those protocols because they really did change something fundamental in crypto. It seems like we're getting another take at that this cycle where we've had a few Bitcoin based lending protocols using discrete log contracts, which is pretty cool. So Lava's one, Ligos is one. I've heard of at least one more, but they're not really necessarily related to a chain. There's certainly more of a TradFi experience with it. But yeah, I'd be curious if there's like anything from your perspective on like the lending market that is a reason you guys want to start there.
So first of all, I suggest this to anyone who wants to learn more. Take a very small, take whatever you feel comfortable with. Check it out. You'll be amazed, especially if you tried some of the other things. You'll be amazed by the smoothness of the UX, by the speed, by the low cost, by the good rates you'll get. So, first of all, check it out. If you're interested, you might look into the other kinds of DeFi protocols that are already today on StarkNet, including the very best automatic market maker out there, Kubo, among the very best. Again, do your own research. Among the very best lending protocols like Vezu, very good DEX aggregators like Avenue, and like a whole bunch of things that probably the average Bitcoin DeFi person or DeFi curious person has not heard about. And I advise listeners to just try it out and write on Twitter, wherever you are. If you like it, if you don't like it, speak candidly about it.
I also echo that. It's a lot of fun. And it's a different experience. The first time I remember the first time trading on Uniswap, and just kind of like magical feeling. And the first time taking a loan out, and then swapping that like USDC or Tether or whatnot, and then dropping in the bank account. And it's like, oh, this is not just fake money. This is very much real. I can deposit it through ACH. Obviously, you got to swap first. But okay, so we have the 100 million staker token part, and now let's go to the Re7, correct?
Yes.
And so in some of the documents you guys sent over to me, you alluded to the similarity with what Multicoin and a few others have done with the Solana ecosystem, and how you guys see like this need for an outside capital group to really help bootstrap a system by, I think in a lot of ways what Multicoin has done and Kyle and that team have done is like push a narrative repeatedly. They have access to capital, which is great, but there's a lot of money in the world. What they really do have is a platform, ability to get on CNBC or get in front of a crowd of people and talk about it. So I'm curious what you're seeing from Re7 and what they're kind of bringing to the table. That was my first thought when I saw the announcement.
So first of all, I highly recommend having Evgeny, the founder of Re7, on one of the shows. He speaks, he speaks very well for himself in explaining what they do. I'll say from our point of view, first of all, yes, I agree that there's a lot of inspiration to be taken from other chains that have successfully found a team that was willing to champion and say, you know what, we like the technology, we believe in it, we will publicly or in a variety of ways support it because we believe it can benefit us and serve our interests. And I am very, very grateful to Re7 for being contributors to the StarkNet ecosystem and putting their faith in StarkNet and stepping up. I think and hope that many others will follow suit. There's room, true decentralized network. You want not just one Kyle Samani and Multicoin. You would actually want 5 and 10 different VCs, crypto funds, and so on. And StarkNet, with its true and deep decentralization, would love to have that. So there's certainly room for more. There are a bunch of other crypto funds that are deep believers in StarkNet. Definitely Re7 seem to be leading the way on this. And I also think it will highly benefit their business, which is the best way, right? We want alignment, not just based on values, which we share, but also based on business interests or belief that this is a good way to move forward.
So what's like the nature of the relationship more directly? Are they participating as a staker in the system? Are they taking out a position in staker tokens or StarkWare tokens? Can you tell me a little bit more about that?
They are contributors to the StarkNet ecosystem. They have chosen to build a bunch of things on it. They are in that sense, they are one of many, many different, other protocols and teams that are believing in StarkNet. They don't have a unique strategic sort of position, right? In running StarkNet or things like that. So we are supportive of them, and we are grateful for them for choosing this. What they are offering is I believe, right? But, do your own research and, go look at their website.
Totally.
But they are offering a bunch of different investment channels or funds for accredited investors. And those, I think the different legs of those investment funds are things like option trading on Bitcoin options. That's one kind of thing, which isn't directly on StarkNet.
Yeah.
Okay. Another is leveraged staking of Bitcoin using lending protocols on StarkNet. And a third is pure staking on StarkNet of BTC.
Yeah.
And this offers a variety of, yield profiles and all of them like Bitcoin yield profiles for Bitcoin whales, institutional investors.
Okay. And so that's part of the pitch here, right? And I think it's a necessary one. This goes back to my comments on Compound and Aave is like, you're a Bitcoin whale. You've been tied up in your Bitcoin forever. There's certainly a lot of TradFi ways of maybe getting additional exposure to liquidity with it. Like we saw Adam Back roll all his into a SPAC, or I believe some sort of SPAC function. We've seen a lot of these digital asset treasury companies pop up. But this is like a native crypto project, and this is for the Bitcoiner who has enough Bitcoin to deposit into this lending function or other financial tools you guys have, and then they can take out dollars and then use them. Actually use them in life. So that seems to be sort of like the main pitch here.
Right? I believe that what Re7 are offering is something where you put inside either Bitcoin or stables, or dollars, or fiat, and you wait some time and you get hopefully a lot more, or some yield on your Bitcoin denominated in Bitcoin. And again, not investment advice, go read, but it's a little bit like a fund, right? Where you buy it, you hold it a little bit, and then hopefully you get more. So I think it's one of those kind of things. Okay. But a lot of it is based or going to happen and unfold on StarkNet because of the technology that is there.
Okay, so I want to pivot, unless we have any more details in that announcement, and I want to talk about Bitcoin development right now, just for the last 5-10 minutes here. So 2023, we had a lot of capital and excitement around Bitcoin L2s. I think a lot of it is probably misplaced excitement, enthusiasm out of what happened with inscriptions and ordinals. People like, okay, we're back. Right? There's money here. We're kind of getting past the FTX doldrums. And so we saw private investments into Citria, into Alpin. We saw BitVM get funded a few times by a few different players. Saw a bunch of other names not worth mentioning because a lot of them didn't turn into anything besides yield farming and then shutting down after a little bit. But we certainly saw some innovation. Since then, it's kind of bled out and been pretty quiet, right? And I think a lot of these teams are now just kind of diligently working in the back end, making BitVM better, or making their bridging solution better, or making whatever project they're doing a little better. At the same time, we had the Covenants debate kind of kick up a little bit more with CPV, CAT, certainly, and then a few others kind of pop up. That's also sort of subsided, and we didn't really see anything necessarily like happen. From those two data points, and then with what you guys are doing now, I'm curious how you are seeing the Bitcoin ecosystem, and how you guys at Starkware, with a good treasury, great technical team, are trying to run the landscape, so to speak.
Yeah, so we're advocating for OPCAT, but doing so very cautiously, because Bitcoin, we have too much love and respect for it to try and move like aggressively. And anyways, it won't work. It will backfire, and it's fine. So we put $1 million into a research fund into OPCAT. I'm a big supporter of any sort of soft fork that advances Bitcoin. I think that I agree with Jack Dorsey that the way I phrase it is that if, God forbid, Bitcoin becomes a Rolex, this asset that only the rich hold directly, and the rest of us, may buy exposure through our local centralized thing, then it will have failed. And you know what? I don't even care if it goes to $1 million and, Sailor gets to sail bigger yachts or whatever.
Yeah.
For me, I'm not interested in creating a new Rolex or a new set of Picassos for the rich. There's enough of that. I'm drawn to the words of Satoshi, who said, we need a way for any two parties to interact with no trusted intermediary. Now, sadly, Bitcoin is not it today. Bitcoin cannot allow any two parties to transact without a third intermediary.
Mm-hmm.
It simply cannot. The only way it will be able to do it is to allow some opcodes. OPCAT by itself would be a huge thing, but I would love to see a few more. I know that folks like Adam Beck, Luke Dash Jr., others would like to see what we call OPSTARK, which is a bunch of opcodes that would allow for efficient Stark verification. What you'll get is post-quantum security. You will get, for those worried about spam and filtering, all of that stuff will happen on DL2, on the financialization and execution layer for Bitcoin, which is StarkNet. And you'll get back to what Satoshi wanted, which is any two parties to transact with no trusted third intermediary in between. Because StarkNet is decentralized, its integrity is based on math and nothing other than that. It has the scale, it has the UX, it has the privacy, has the low cost to allow global adoption of decentralized Bitcoin. And we need these 9 lines of code and a little bit more. We get that, as Archimedes said, give me a place to stand and I will move the earth. The same thing.
So I love that. That's a great quote. From the landscape, though, and from the conversation here, greater Bitcoin conversation, we haven't seen enough movement on getting into a covenant or getting to something like that. But people are still building around that. So Alpin building on BitVM still. Citria,
love Alpin, love Citria.
They're building some cool things. And you guys are as well. So it seems like the building doesn't stop, right? Like you still have to find a way, despite consensus being against any sort of covenant implementation.
I don't think consensus is against covenant implementation.
Okay.
First of all, it's very hard to gauge consensus on Bitcoin just because, who decides? Crypto Twitter is the last thing that you can trust because I don't know who's controlling it and who has what incentives. But again, Satoshi said it himself in a variety of ways, by the way, of course, support when he was still interacting. He was supportive of ZK. He introduced a whole bunch of opcodes. Okay, he removed them and then disappeared, unfortunately, right? But he was very pro-expansion. If he was conversing with us right now, he would be a ZK Stark Maxi like myself. I have no doubt. And we would have, I don't think Ethereum would have existed. Zcash wouldn't have existed if Satoshi was still around because he would have said, this is stuff that we need. Like we need smart contracts. We need the ability to do more. I have no doubt about that. Yeah. So, and again, go back to the white paper. Bitcoin was built so that any two parties can interact, can transact with no third party intermediating that. That is not achieved today. And that is what Satoshi set out to do. Yeah. And we need to reach out. Jack Dorsey is saying it. A lot of people out there are saying it. You need to find a way to scale it. And unfortunately, I love Lightning. Lightning ain't it. After 5-7 years out there, the world, my mom is not going to use Lightning. Yeah. My mom can use, in fact, she does use StarkNet wallets. She's not going to be able to use Lightning. It's not going to happen. Sorry.
Yeah. I love it. I think that's a good place to end it. Thank you so much for joining the podcast. Where can people follow you on Twitter or learn more?
I hope we'll have the links, but my name, Eli Ben-Sasson, and follow StarkNet. Those are 2 good handles. And thanks, Will, for speaking with me here.
Yeah. Thanks to PubKey.